Hello, hello. Dan and Brian here.
Hello, hello. How's everybody doing?
Everyone's doing great, Brian. How are you?
Good.
Good, good. Today, we're going to get right into this. We're going to talk about, did you strike out on your 2023 tax return? Or even worse, get hit with that double or much dreaded triple whammy pitch? Did you leave money on the table? Business and life imitate baseball. We don't want to leave runs on the table. Do you know if you did leave money on the table? Tax season, it's like a baseball season. It's not short. It's the long game. It's 162 games. Games can be 3 hours. So, Brian, can you give us some ideas how to play the long game to win?
Yeah, absolutely. I mean, this is the time of the year you really want to look at your tax planning. Most people end up getting their tax return, filing it now that tax season is over until next year when they have to do their taxes. And that's a big mistake. A lot of people last year, some new clients came in and, they had some options. They exercised the first half of last year. And oh, by the way, some of the mutual funds distributed some unwanted capital gains at the end of the year. And before you know it, they owed thousands of dollars in taxes. And the government and Uncle Sam said, well, there's a penalty on that. And if you don't file your taxes by April 15th, you'll start accruing interest. And as we know, interest rates are high, and the government takes advantage of that and makes you pay more. And then if you even did file your taxes April 15th and you had to owe, well, April was one of the worst months in the stock market in the last 10 or 15 years. You meant to sell some assets when the market was actually down to pay your taxes. And that is how you get caught in the double or triple whammy.
And it's easy to. The good people get caught with that. One of the things that I've seen and just came out, I think in March, was that the inherited IRA regimen, part of the Secure Act 2.0, 2.2, whatever cockamamie stuff we got going on here. It's a great country, but that you don't have to take out money from the inherited IRAs. What's up with that? Should you just default to saying, okay, I don't have to take any money out, everything's hunky-dory?
Yeah, I mean, and every time you go by the rule of thumb, that gets you in trouble because you got to look at your own individual situation, whether it's an inherited IRA or you have an IRA and you're over 59 and a half thinking, well, I have to take money until I'm 73 or 75 years old. I can forget about it. That's a big mistake. If your income or your taxable income is basically little and your tax bracket is 10%, why wouldn't you take an inherited IRA or a regular IRA if you're over 59 and a half? And the opposite is true. I see people say they got an inherited IRA. I'm going to take out what I want to take out. Well, you're a 37% tax bracket. Why would you take it out that year? So it depends on your individual situation. So there's no one right or wrong answer.
Excellent, excellent. All right, a couple more things. What I've been talking to some folks about is that the HSA, it's triple tax-free. You got a family, you're over 55. You can, I think it's $9,100, $9,000 and change.
Yep.
And maybe you're not in a health plan that qualifies for that, but come open enrollment, you have a chance to take a look at that. So again, $9,100, you get a tax deduction. You can invest that money. Then when you take it out at any time for any qualified health benefit, a healthcare bill between now and forever. And there are also some other fancy techniques on making that partly Roth. That's a little more complicated. Take a look at that. There's no other vehicle like that. One of the other things that I've been talking to folks about, just little things, is looking at making a qualified charitable distribution. If you're not getting a deduction for your charitable gifts, do it right from your IRA. Again, you have to be over 72, or if you've already, years ago, you passed 70, and make those directly. It's basically a pre-tax charitable contribution from your IRA. Brian, is there anything else? We're going to wrap this up.
Like we always say, your taxes affect everything you do, and everything you do affects your taxes.
That is for sure. If you want to find out how to avoid leaving money on the table, how to play the long game when it comes to your taxes, not get hit by that double or triple whammy come this time next year, simply shoot me an email, Daniel@WMGNA.com, or call us 860-679 5255, because here at WMGNA Tax Help Financial Solutions, we figure it out for you. We figure it out for you.